Hello everyone, my name is Temba. So today I'll be talking about the repo rate, how it works and how eventually it affects us. But before we get to that, perhaps let's look at the Reserve Bank. So the Reserve Bank, or SAP in short, is the central bank of South Africa. It is responsible for monetary policy of the country. In other words, it determines how much money is floating around the country's economic system ready to be spent on goods or services. And in doing so, it's able to influence interest rates and the health of the economy. So some of the responsibilities of the Reserve Bank is to protect the currency of the country, is to keep inflation in check. In South Africa, I think it's set to be between 3 to 6%. And currently we are not within those parameters, or rather the targets of the South African Reserve Bank. The other, it is to regulate and supervise the banking and the insurance industry, to manage our official gold and currency reserve. SAP has few tools that they can use to influence the economy. One of the main tools that they use currently, it's the repo rate. This is the rate at which commercial banks borrow money from the Reserve Bank, or even from each other, which sometimes is referred as the overnight rate. In many countries, it's the same rate, the overnight rate and the repo rate. Banks are required to keep a certain amount of customer deposits on hand, and this is called the reserve requirement. And it is set by the South African Reserve Bank. If a bank is short on one night, it will call the other bank and borrow funds so that it can meet their minimum requirements. And the rate at which they will borrow those funds, it's influenced by the repo rate. And we know banks profit by borrowing funds at one rate and lending it out on a higher rate. Suppose the Reserve Bank hiked the repo rate. Banks wouldn't want to borrow funds at a higher rate while they are lending it out at a lower rate. In doing so, they will make losses. Hence, when repo rate increases, the banks will also increase the prime lending rate. Generally, the Reserve Bank will hike the repo rate if there is too much activity in the economy, which is resulting to inflation. Inflation is the increase in the price of goods or services, which is driven by demand and supply. What results to inflation is when there is too much money in circulation in the economy. In order to address this, the Reserve Bank will hike the repo rate, which in turn will result into the hike in the prime lending rate. This will make cost of borrowing funds expensive, cost of doing business expensive. Companies will halt their expansions and even freeze employment. And by effect, people won't spend much. And by decreasing the demand, then the price of goods gets to stabilize and not increase beyond their inflation targets. As I'm doing this video, in South Africa, the Reserve Bank recently hiked the repo rate by 50 basis points. In the words of our governor, this is just a short-term pain for a long-time gain in South Africa. I don't know how you guys feel, but yeah, I just thought of making this video. I know it's not ordinarily the type of videos that I make, influenced by the responses I received in my WhatsApp status. Hope you guys enjoyed it and learn a few things. Thank you.